Good day, guys. Welcome to Forex Walker. Welcome to episode 85. Welcome to the only arbitrage trading channel. Here we don't teach the full margin conundrum, whatever they call it, 100% margin, where you get to lose everything for just having a candlestick giving you a pullback. We allow the market to breathe, and you should also allow the market to breathe because yeah, we do commit a lot of mistakes. We do take losses, but because we don't do full margin, we are still able to return back into the market and take our trades and align with the direction of the market. We don't force a trade if that trade is not happening for you. You might as well step aside. Most of the time, we trade so many currency pairs to a point where we don't really need to force a trade. So we don't really worship a trade, in other words. So here we have IUD CHF, and I just told you that normally I take profit once we get to the, the take profit level that was agreed upon, which is here for now on the previous shoulder. The take profit level is up here on this previous order block, on this last order block before the drop. Here we have the actual drop, and this is the last order block. As you can see, the candles are plain, showing you that the market was trending after the last order block, and that's what makes it the last order block. So the actual take profit level is up here, but we were supposed to be taking profit from here. So what I do is that I wait for the market to break a little bit up here to once it gets to, let me show you, once it gets a little bit up here, I would usually move my stop loss to the previous shoulder here uh, to wait for the take profit. And normally what happens is that once we break up here, you get a pullback that is much larger than the previous lows. And after that pullback, that's where we get to the take profit level. And I don't really want to handle take profit level that takes all of my profits, where I might as well panic and take profit down here, which is unnecessary because the entry must have been down here for those who entered first and those who entered secondly. The entry is here, so you don't want the market to drop all the way down there before you get to the take profit level. So what I normally do is that once we get here, I take profit. Here you might say you move your stop loss to the flip zone. The flip zone, let me show you the flip zone. The flip zone is actually here on the previous shoulder. I'll show you those two previous candles. The flip zone is a market gap that was left between the previous shoulder before we broke the next high and the pullback from it. So that the gap that remains in between is called a flip zone. I don't know what other people call it, but this is what I call the flip zone. So normally the market reverses into the flip zone before it goes to the take profit level. I apologize for having a cluttered uh, page, but this is the idea of what we call a flip zone, and we expect the market to reverse into it. It does not necessarily have to pull back all the way into it. It can always do a 50% uh, retrace into it and reverse. So that is the take profit level. So what you do is that you move your stop loss to break even below the flip zone. You move your stop loss here, and in case the market decides to give you a huge pullback before you even get to the take profit level, the market will stop you out from down here, and if it doesn't, then you'll be able to take profit. You'll be able to move your stop loss up here and take profit from up there. So that is the idea of what we are trying to achieve in this trade. This is the AUD cat. The AUD cat, the the trade that was seen to be high risk by price action traders, and it became the most beautiful trade above all other trades. And the entry level was here, and those who entered much earlier might have entered up here because I also entered from down here. So the major pullback was actually here. Well, we turned around to the previous shoulder and we took off all the way up there, and the market reversed. Normally, when I see this, I panic and I take profit and I re enter the market on the previous shoulder. So that's what I normally do. I don't wait for a pullback that is scarier than the 50% fee. If it doesn't give me the 50% fee, but I'd rather take profit from all the way up here because I'm expecting it to break this high. If it doesn't, then it will stop me out and then I'll start all over again. So this is one of the most beautiful trades that are fundamentally led. Remember, this was a first touch, a second touch. We expect the third touch to manipulate from up here. And after that manipulation, we expect the market to drop. Now that is price action. This is how I normally follow price action, but because I'm an arbitrage trader, I have context and I know that the market will not reverse from over there. It will actually break all the way above there. So that is what happens when you have fundamental analysis on your side. Rather than taking a short, you can actually take a long at a point where many traders think it's a short. Nevertheless, you do know that the market will actually take off from that because you have market sentiment, market fundamentals, geopolitics, you have context, and you can actually take a trade in the opposite direction from the normal traders in the price action realm. And that's how we succeeded to the take profit level. Even when it was here, I believe that the trade will continue looking at context. Now, the most beautiful monetary policy divergence trade in the IUD and ZD had it stopped me out because I was not expecting it to give me a pullback all the way down to the 50% fee. So I actually exited the trade. But this beautiful monetary policy divergence, I believe it might continue to take off and move higher, but I'm no longer in the trade, especially because it's a negative carry. It is unnecessary for me to keep holding a trade that is giving me a negative carry in the short direction. So for those who have multiple brokers, I do have multiple brokers, but my other broker does not allow me to hold this trade. It also sees AUD and ZD as a negative carry. So both brokers, they see it as a negative carry, and I was just holding it to show you what monetary policy divergence is the same thing showed itself up from over here. You can see that the market reversed and it almost broke the previous low, like the one in the USD CHF. So whatever happens, you move your stop loss to break even, and that unemployment rate will do what it does best. Yeah, this is one of the trades that stopped me out. Remember, and the first entry was here on the 24th of July. We were trading something else, something that I call the movement of capital from the northern hemisphere to the southern hemisphere, and the initiation of the interest rate cutting cycle in the NZD and many other things. So this was July before I started the channel, and we were going short. We were talking about shorts. Even when we went to the 50% fee, we reversed into the previous orders and we kept holding all the way down here. And when the market reversed from here, we actually it actually stopped us out, and we had another reversal from here, but that reversal was not having it. It actually reversed all the way up there. So this is one of the trades that forced us to exit with both positions. Those who understand price action will tell you that, yeah, you cannot sell here. This is the lowest bottom and the market will reverse. We don't trade like that. We look at context, we look at market fundamentals, we look at market sentiment. When we sell the market, we sell it. Whether it turns around from here, it doesn't matter. It's not really important to us because that is price action. IUD USD is doing the thing, but on this channel, we did not really talk about AUD USD. I believe we'll talk about it in 2026 on the 2026 shorts after we get up there. But this is a plan that is pending ahead of time. It is not something that we're doing currently. So we'll see what happens in the future. But we are looking forward to buying the US dollar and selling the Australian dollar. But at the moment, you know that we are buying the Australian dollar and selling everything else. Not so long ago, on the previous episodes, I told you that the euro is bullish. I said the euro is bullish, and also the US dollar was also uh, taking losses based on the unemployment rate. So that's the reason why we expected a tiny pullback like this. I was actually I was actually explaining the price action projections or the market fundamental projections into price action. I was explaining why I'm drafting these kinds of lines, and this is exactly what happened after that. And whether the market continues to sell, it doesn't matter. What happened is that we expected a reversal from here, but I expected this to be the first touch, second touch, third touch. I expected to manipulate all the way down here before it reverses, but it didn't. So that means the uh, economic divergence was huge between the two currencies, and that's the reason why it did not even touch this purple line here. It reversed immediately. So this is what I meant when I said the euro is bullish and the US dollar is actually losing strength due to the unemployment rate. And these are the results. The Euro AUD hit parity. Our expectations were that as soon as we break below this low, we take profit or we move our stop losses to the 50% feet to the previous shoulder to secure our profit. So whatever pullback that comes after here, we don't really care what happens with that pullback. The take profit is too close. The take profit level is too close. So it is totally unnecessary for us to wait for a pullback that goes all the way up there, taking all of our profits before it comes here. So whoever is trading this, just take profit and you will save your trades. Goodbye, guys. See you on the next episode.